Hey everyone, welcome back. Today we're going deep on what shook up Wall Street this week. It wasn't a full-blown crash, but definitely a dip that got people's attention, especially after the growth we'd been seeing. The S&P 500, NASDAQ, Dow Jones all finished lower on Friday. Don't forget to like the video and subscribe to the channel.
It's all about how investors are interpreting the economic news. Some positive, some not so much. It's almost like they're waiting to see what the Federal Reserve does at their meeting next week.
Yeah, it really is a mixed bag. The housing market is strong, which is usually a good thing, right?
Yay.
But then you have the S&P Global Survey indicating business activity is slowing down. Doesn't exactly paint a clear picture.
No, it doesn't. And then you've got rising prices, not great. But hiring is also up, which usually points to a healthy economy. Tough spot for the Fed to be in.
For sure. And then on top of all that, consumer sentiment dipped too, according to the University of Michigan. Makes you wonder if people are getting nervous about what's coming next.
It all adds up to this cautious optimism with a big question mark. Everyone's watching the Federal Reserve, wondering what they'll do with interest rates. Raise them, hold them steady, even cut them. Right now, most traders seem to think they'll hold steady, with the first cut maybe coming around June.
But let's not forget the wild card here. President Trump's trade policies, those tariffs have investors on edge.
Definitely. There's a lot of concern they'll push prices even higher, worsen inflation, and maybe even delay those rate cuts everyone's hoping for.
It's like a domino effect. Tariffs, inflation, delayed rate cuts. And to make matters worse, nobody seems to know when these tariffs might actually go into effect. February 1st, April 1st. It's confusing.
Adds to the uncertainty, no doubt. And speaking of uncertainty, we can't ignore the tech sector. Friday was rough.
Yeah, even companies like Nvidia, which had been doing so well, saw their stock prices drop.
And then you have Texas Instruments. Their prediction of lower profits, they're blaming it on too much inventory, really didn't help. Definitely added to the tech sector's problems.
What a roller coaster. So we've talked about the overall market trends, the tech sector's struggles, but what about specific companies? Any stories that stand out?
Well, American Express announced a big profit jump for the fourth quarter, 12%. But get this, their share price actually went down.
Profit up, stock down. That doesn't seem to make sense.
Sometimes even good news can be interpreted negatively. Depends on the bigger picture. Anyway, moving on. Boeing made a big announcement saying they're expecting a significant loss for the fourth quarter. Everyone's waiting to see the full report now.
$1 billion loss will do that. But on a more positive note, Verizon had a fantastic week. They exceeded subscriber expectations. Shows that even in uncertain times, some companies can still thrive.
Absolutely. There are still pockets of strength out there.
Really shows how investors are trying to make sense of all this information flying around. Speaking of things moving fast, let's go back to the tech sector for a minute. Just a few weeks ago, it seemed like tech stocks were unstoppable. What happened?
Well, tech companies are very sensitive to interest rate changes. You know, when rates are low, it's easier for them to borrow money and invest, which can lead to those huge stock price jumps we saw. But as soon as rate hikes start to seem likely, investors get nervous.
So it's a balancing act between potential growth and the risk of higher borrowing costs.
Yeah.
And right now, the risk seems to be winning.
Right. And that's where the Fed's communication is so important. If they can make their intentions clear and manage expectations, it can help calm things down a bit.
High stakes for sure. But it's not just the Fed they have to worry about. Global events also play a role in how investors feel.
Absolutely. Geopolitical issues, political instability, even natural disasters can impact financial markets. It's a reminder that everything's connected. What happens in one place can affect everything else.
And we're seeing that interconnectedness right now with the trade tensions between the U.S. and China. Those tariffs are like a dark cloud hanging over the global economy.
The uncertainty around trade policy makes it hard for businesses to plan. They hesitate to invest or expand when the rules could change at any time.
So it's not just the direct impact of the tariffs, but the overall uncertainty they create.
Exactly. And that uncertainty can become a self-fulfilling prophecy. If businesses hold back on investment and hiring, it can slow down the economy even more, which just scares investors even more.
It's a vicious cycle. Let's step back from that cycle for a second and look at some companies trying to navigate these rough waters. We talked about American Express and Boeing, but what are some other interesting stories?
Well, a lot of retail companies are having trouble adapting to online shopping. Traditional stores are facing tough competition from online giants. They're having to rethink their entire business models.
It's classic disruption. The old ways don't work anymore, and companies that don't adapt are paying the price.
But on the other hand, we're seeing huge innovation and growth in areas like artificial intelligence, renewable energy, and biotechnology. Those sectors are attracting a lot of investment and excitement.
It's fascinating to see these contrasting trends happening at the same time. Some companies clinging to the past, past, while others race towards the future.
It creates a very dynamic landscape of winners and losers. Investors really need to do their research and understand what's going on.
Speaking of things that are going on, let's talk about government regulation. There's been a lot of debate about how much the government should be involved in the economy.
It's a balancing act. Regulations can protect consumers, ensure fair competition, and protect the environment, but they can also slow down innovation, increase costs, and create a lot of bureaucracy for businesses.
So it's about finding that middle ground where regulation promotes stability and fairness without hurting economic growth.
Right, and that balance can be different depending on the industry and the overall economic situation. It's an ongoing conversation.
And speaking of changing conversations, let's talk about how social media and technology are shaping investor sentiment. News travels so fast these days, and social media has become a huge amplifier.
Yeah, social media has definitely changed how investors get information and how they react to it. A single tweet or a viral video can have a massive impact on the market. It's a double-edged sword. On one hand, it makes information more accessible and gives individuals a voice. On the other hand, it can also spread misinformation and be used for market manipulation.
It's like the Wild West of finance. Regulators are still figuring out how to manage it.
Trying to balance free speech and open communication with the need to protect investors from fraud and manipulation is a real challenge.
It keeps things interesting, for sure. Speaking of interesting, let's look at the bigger picture. We've been focused on the U.S. market, but there are interesting things happening globally.
For sure. Emerging markets are playing a bigger and bigger role in the world economy. Countries like China, India, and Brazil are growing quickly, and their consumer markets are becoming really attractive to big companies.
But that growth also comes with challenges, right? There are concerns about political instability, infrastructure problems, and environmental sustainability in some of these places.
That's true. Investing in emerging markets can be very rewarding, but it's also riskier. Investors need to carefully consider the political, economic, and social factors before making any decisions.
It's a reminder that diversification is important. Spreading your investments across different regions and types of assets can reduce risk and potentially increase your returns.
Diversification is a fundamental principle of investing. It's all about not putting all your eggs in one basket. By spreading out your investments, you're reducing the impact of any single event.
Like building a portfolio that can handle anything.
Yeah.
But let's zoom back in on the U.S. market for a moment. We've talked a lot about the causes of uncertainty and volatility. But are there any positive signs?
Despite the challenges, there are reasons to be optimistic about the U.S. economy. We have a skilled workforce, a strong entrepreneurial spirit, and a history of innovation. These all contribute to long-term growth.
And the stock market is always looking ahead. It reflects not just current conditions, but also expectations for the future.
Exactly. There will be bumps along the way, but the long-term outlook for the U.S. economy is positive. It's important to be patient and have perspective.
Well said. It's easy to get caught up in the daily ups and downs, but it's crucial to keep the bigger picture in mind.
Absolutely. Investing is a marathon, not a sprint. Staying informed, disciplined, and focused on your long-term goals is key.
Wise words. We've covered a lot today. Market jitters, trade tensions, the changing world of technology and globalization. It's been a whirlwind tour of the things shaping the world of finance.
It's definitely an exciting time to be an investor. Lots of challenges and opportunities, and things are changing faster than ever.
We'll never be bored, that's for sure. Before we wrap up, let's go back to something we talked about earlier, financial literacy.
It's so important for people to understand the basics of investing in personal finance. With all the online trading platforms and the increasing complexity of financial products, you need to have the knowledge and tools to make good decisions.
It's about empowering yourself to take control of your financial future, and it all starts with education.
There are so many resources available online and in libraries to help people learn about investing, budgeting, saving, and managing debt. It's never too early or too late to start.
Knowledge is power, and in finance, that power can mean financial security and freedom.
Absolutely. So to all our listeners out there, don't be afraid to ask questions, seek out information, and keep learning. Your financial well-being is worth it. It's about finding the right balance between risk and potential reward, and making sure your investment strategy matches your goals and how much risk you're comfortable with.
And speaking of risk, let's talk about something that can really throw things off black swan events.
Those unpredictable events that nobody sees coming but have a huge impact, like the 2008 financial crisis. Nobody expected it, and it really shook the global economy.
It reminds us that no matter how much we analyze and try to predict what will happen, there will always be things we don't see coming.
Exactly. That's why it's so important to have a diverse portfolio and a long-term investment outlook. Black swan events will happen, but the fundamentals of the economy usually win out over time.
It's about riding out the storm and staying focused. But let's change gears a little and talk about something more concrete. Infrastructure spending?
It's a topic that doesn't always get a lot of attention, but it's really important important for economic growth. Investing in things like roads, bridges, airports, and other essential infrastructure creates jobs, helps businesses be more productive, and improves our lives overall.
It's like building the foundation for a strong economy.
Exactly. And we're seeing more emphasis on infrastructure spending in a lot of countries. They're recognizing that these investments are key to staying competitive in the long run.
And it's not just physical infrastructure. We also have to invest in our digital infrastructure. Things like broadband internet, cybersecurity, and data privacy are becoming more and more important in today's world.
Absolutely. The internet is essential to the global economy, and we need to make sure it's reliable, safe, and available to everyone.
It's about creating a fair playing field so everyone can participate in the digital economy.
But let's not forget about people. Education and workforce development are just as crucial as physical and digital infrastructure.
Investing in people, giving them the skills and education they need to succeed in the 21st century economy.
Exactly. We need to prepare our workforce for the jobs of the future, jobs that will need skills in technology, data analysis, and critical thinking.
It's about encouraging innovation, creativity, and the ability to adapt. Those are the things that will drive economic growth in the future.
And speaking of the future, let's talk about some of the new trends shaping the investment landscape. We've already mentioned AI and renewable energy, but there's so much more going on.
The world is changing faster than ever, and so are the investment opportunities.
We're seeing amazing progress in biotechnology, nanotechnology, and space exploration. These fields have the potential to completely change industries and create entirely new markets.
It's an exciting time to be an investor. So many possibilities.
But it's important to remember that not every new trend will be a winner. There will be hype, bubbles, and some things will inevitably fail.
It's about figuring out what's real and what's not, and identifying the truly groundbreaking technologies and companies.
And that takes research, careful analysis, and a good dose of skepticism.
Well said. We've covered a lot today, from market ups and downs to infrastructure to the future of technology. It's been a great look at what's shaping the financial world.
It's a complex world that's always changing, but if we stay informed, engaged, and keep learning, we can navigate it and set ourselves up for success.
Absolutely. To all our listeners, thanks for joining us on this journey. We hope you've learned some valuable things, and we encourage you to keep exploring the world of finance. Don't forget to like the video and subscribe to the channel.
Remember, the best investment you can make is in yourself. Keep learning, keep growing, and keep working towards your financial goals.